Gas prices on pace for a fifth consecutive week of losses, tracking for their worst month now since January of 23. With winter hopefully winding down, will that move lower continue? Our next guest is a major player in the space and joins us with his outlook. Let's bring in Williams CEO Chad Zamarin. Company delivers roughly a third of all nat gas in the U.S. Great to have you back. Good to see you.
Yeah, good to see you, Carl. Thanks.
Are even you surprised at sort of the relief, the wave that we've come off of? Was we got near 6?
Yeah, no, I wouldn't say surprised. Think about natural gas. We're actually very well balanced from a supply and demand perspective. And when you see short-term price volatility like we saw during the winter storm, that wasn't a supply issue. We actually had 3 trillion cubic feet of natural gas in storage. The world's largest battery was charged up and ready to deliver. That's weeks of supply that we had available. It really is infrastructure preventing us from delivering that to markets when we need it. So we're right now just about right at the 5-year average for storage in the United States for natural gas. So you mentioned a tough month for gas prices. This is a good thing for the U.S. consumer. Natural gas prices right now are about the energy cost equivalent of 35 cents per gallon gasoline. So the more we've got low cost, affordable natural gas available for consumers in our country, I think the better we are from an affordability perspective.
Right. Can these lower levels, though, be sustained if demand accelerates? We've talked all day long about the AI build out.
Yeah. No, we do think that there's a lot of new demand coming. We should double LNG exports from the United States. Natural gas production has become our country's superpower. We now produce more natural gas than the next 3 largest countries on the planet. And those countries are Russia, Iran, and China. So those 3 combined, we produce more natural gas than they do. So this is our country's superpower. We can produce more gas. We will likely see an increase in price modestly in order to support more development and growth as we get through the year and into the later part of the decade. But again, the U.S. producer has an incredible capability of producing low-cost, affordable energy, and we think we can meet the rising demand without significantly increasing natural gas prices.
And what does that mean for Williams itself, your power generation strategy? What's the real upside here in terms of what percentage it could be for as part of your company?
Yeah, I think it's really a benefit for our country. When you think about manufacturing, you think about this next generation of technology, it will be won by the countries and the companies that can get access to low-cost, affordable, reliable energy. And so, our job is to make sure that American companies, American consumers can get access to low-cost, affordable, reliable energy so that we can grow our economy and we can win the race for the next generation of technology. So we will continue to expand. And, if you turn on a light, if you power up a factory, if you heat your home, there's a 1 in 3 chance that Williams has helped make that happen. We've actually announced that we're going further, and we're now delivering natural gas power generation directly to data centers here in the U.S. so that we don't stress the grid, we don't drive up cost to consumers. We can bring low-cost, affordable power generation directly to companies in America so that we can win the race for the next generation of technology.